If you're a faithful Latter-day Saint trying to figure out whether you should pay tithing on your gross or net income, you need to watch this entire video because I'm about to show you the actual mathematical difference, and it's not $100 or even $1,000. For a family earning $100,000 a year, the compound interest difference between tithing on gross versus net over a 40-year working life is over $500,000. Now, before anyone hits the comment section, I'm not here to tell you which method is right. The church handbook says that's between you and the Lord. But what I am going to do is show you the actual math that almost nobody runs, explain why this matters for your financial planning, and give you the spreadsheet so you can calculate your own family's numbers. Because by the end of this video, you'll know exactly how much this decision impacts your retirement, your kids' education fund, and whether you can afford that senior mission you've been dreaming about. Here's what we're going to cover, and trust me, you're going to want a pen and paper for this one. First, I'm going to break down the three most common interpretations of income when it comes to tithing, and yes, there are more than just gross and net. Second, we'll run the actual compound interest calculation over 10, 20, 30, and 40 years to see when this difference really starts to explode. And third, and this is the part that shocked me when I first calculated it, I'm going to show you what happens when you factor in tax deductions. Because if you're not itemizing your taxes, you might be in for a surprise. So stay with me, because if you click away now, you'll miss the single biggest financial calculation that affects every Latter-day Saint household. Okay, so let me start with a quick story. About 5 years ago, I was sitting in a financial planning meeting with my wife. We just had our third kid. We were trying to figure out how to save for missions, college, and retirement. And I remember looking at our budget and thinking, we're giving 10% off the top. Shouldn't we at least know what that actually means mathematically? And here's the thing. I grew up in a home where we paid on gross. My wife's family paid on net. Neither of us had ever questioned it. We just did what our parents did. But when you're trying to optimize your finances, when you're trying to be a good steward, you need to understand what the numbers actually say. Now, the official church guidance from the General Handbook states, the simplest statement we know of is the statement of the Lord himself, namely that the members of the church should pay 1/10 of all their interest annually, which is understood to mean income. No one is justified in making any other statement than this. Notice what it says. Income is interpreted by the individual member. The handbook doesn't prescribe gross or net, and that's actually really important because it means this is a personal decision between you and the Lord. But here's where it gets interesting for those of us trying to practice provident living. If the church gives us agency in this decision, then part of being a good steward is understanding the financial implications of that choice. Not so we can be cheap, but so we can plan wisely. All right, let's define our terms. When we talk about tithing calculations, there are actually three main approaches that faithful members use. Option 1, gross income. This is your total salary before any deductions. If you make $100,000 a year, you pay $10,000 in tithing. Simple. This is often called the safest approach culturally because you're paying on everything before the government takes taxes. Option 2, net income after taxes. This is your take-home pay after federal, state, Social Security, and Medicare taxes. Using that same $100,000 salary, after taxes you might actually receive around $75,000. So your tithing would be $7,500. Option 3, net income after all deductions. Some members interpret increase as truly what increases their household. So after taxes, health insurance, 401k contributions, HSA, etc. This number varies wildly by family. For our math today, we're going to focus on the most common debate. Option 1 versus option 2. Gross versus net after taxes. Okay, here's where we get into the actual math. I'm going to use a real-world example with these assumptions. Annual household income. $100,000 annual salary increase, 3% for cost of living investment return, 7% annually, which is the historical S&P 500 average tax rate, 25% effective combining federal and state time horizon, 40 years from age 25 to 65. Scenario A, tithing on gross, $10,000 per year. Scenario B, tithing on net, $7,500 per year. The difference each year is $2,500. Now, you might think, okay, $2,500 a year times 40 years, that's $100,000. But that's not how it works because of compound interest. Let me walk you through what happens if you take that $2,500 difference and invest it every single year at 7% annual return. After 10 years, total contributions, $25,000 investment value, $34,579. After 20 years, total contributions, $50,000 investment value, $102,448. After 30 years, total contributions, $75,000 investment value, $236,575. After 40 years, total contributions, $100,000. Investment value, $505,365, $500,000. Let me say that again. The difference between paying tithing on gross versus net over a 40-year career, like assuming you invest the difference, is over $500,000. That's not a typo. That's the power of compound interest over time. Now, I know what some of you are thinking. Are you telling me to pay less tithing? No, absolutely not. I'm showing you the math so you can make an informed decision. But let's talk about what $500,000 actually represents. That's 10 full-time missions for your kids or grandkids at $50,000 each, or 4 to 5 senior couple missions for 18 months at high-cost locations, or your entire retirement security giving you the freedom to serve without financial stress, or 4 years of in-state tuition at BYU for multiple children, or a fully funded 1-year food storage supply worth $15,000 replaced every decade for your whole life, or a massive safety net so you never have to go to the bishop's storehouse for help. See, here's the reframe. This isn't about paying less tithing. It's about understanding the opportunity cost of your faithful decision. Now, here's where it gets even more complex, and this is something most people don't consider. In 2025, the standard deduction for a married couple is $29,200. That means if your itemized deductions, including tithing, mortgage interest, and charitable giving, don't exceed $29,200, you get zero tax benefit from your tithing. If you pay $10,000 in tithing on gross and you don't itemize, you're paying that $10,000 with post-tax dollars anyway. You're not getting a deduction. But if you pay $7,500 on net, you've kept $2,500 and you still don't get a deduction. Here's the twist. If you're in that middle income range where you don't itemize, paying on net is effectively the same tax situation as paying on gross, except you have more cash flow to save, invest, or donate elsewhere. Now, for high-income earners who do itemize, there's an advanced strategy called tithing bunching, where you pay 2 years of tithing in one tax year to exceed the standard deduction threshold. But that's a whole other video. Okay, let's address the elephant in the room. Some of you are feeling uncomfortable right now. You're thinking, this feels like we're trying to get around a commandment. And I respect that. The law of tithing is sacred. It's a commandment with a promise. But here's my counter question. Is paying on net somehow less faithful if the church handbook explicitly says it's your decision? You have member A who pays $10,000 on gross and feels at peace. You have member B who pays $7,500 on net, invests the difference, and uses that growth to fund missions and temple work. Are we really going to say one is more righteous than the other? The principle of stewardship teaches that we're accountable for how we manage all our resources, not just the 10%, but the 90% too. If we're serious about provident living, we can't ignore math. Now let's be real for a second. There's enormous cultural pressure in the church to pay on gross. I've heard talks where leaders say, do you want to be blessed on your gross or your net? And look, I get it. The intent is good. But here's what I've observed. A lot of families pay on gross out of cultural obligation, not personal conviction. And then they're financially stressed. They can't save for emergencies, they're going into debt, and they feel like they can't talk about it because questioning tithing calculation feels taboo. Let me tell you something. Your bishop is not checking your tithing calculation method. The only question on tithing settlement is, are you a full tithe payer? If you're paying 10% of what you define as your income, you check that box. Look, here's my final thought on this. The law of tithing is about obedience, faith, and sacrifice. The math is just math. Your relationship with the Lord on this is personal, and I would never presume to tell you what's right for your family. But I will tell you this. Ignoring the math doesn't make you more faithful. It just makes you less informed. And if we really believe in the principle of stewardship, that we'll be accountable for how we managed our resources, then running these numbers isn't faithless. It's responsible. If you found this helpful, do me a favor. Subscribe to Deseret Dollars, We're building a community of Latter-day Saints who believe you can be faithful and financially savvy. It's not either or, it's both. Drop a comment below. Do you pay on gross or net? And more importantly, did you run the math before you decided? And I'd love to hear your perspective. As always, I'm not a certified financial planner. This is for educational purposes only. Consult a professional for your specific situation, but also use your brain, run the numbers, and make informed decisions. Thanks for watching. Stay provident. I'll see you in the next one.